Don't you just hate when people are just chat? They just come up with hypothetical scenarios and they're not out there in real life. I hate that, and you probably do too. So I don't want to do that myself. So in this video, this is a real life scenario in which a real seller needed some help, and a real agent, he came to me, he said, I have this house, it won't sell. Will you buy this house? So I am going to be meeting with the seller, explaining to her creative financing subject to, and getting that contract signed. So tune in and watch. All right, so tell me a bit, like some insight about this one. So I know you purchased it in December or October. You said. Okay, so it's been a few months, so you haven't had a chance to build much equity yet in it.
It was, the payment for the mortgage was $1504.
And I'm gonna just jot this down also too. And this is County Street, 2020 County. Okay, so your payment, is that PITI, like everything included is $1504?
No.
Okay.
Everything included was $2004.
Okay.
With that being taxes and insurance, but
the principal and interest, okay, is, you said 15. Okay, say 1,600 to be safe. Okay, and you're still active duty, so you still have regular taxes and things like that. What's your interest rate? Do you know?
It's the type of stuff I should know, right?
Nah, that's no problem. Most people don't. I don't know half of mine.
I'm logging into my portal.
No problem. What's the dimensions on here again, Noah?
Oh, which part? The house?
Yeah.
I have it on my laptop.
Okay. 3 bed, 2.5 bath. Do we know square footage?
Of the whole home?
Yeah.
I should have that.
Okay, cool. 6.6 interest rate. Okay, gotcha. So that could possibly be refined. Okay, so it's 6.6. So your principal, your monthly is like, you said 2004 solid?
Yeah.
It's not bad. Okay. And then, so Noah was telling me like you were looking into like a deed-in-lieu, things like that?
Yeah.
Why?
Because I rushed to buy this home first because I PCS'd here all the way from another country. I kind of needed something really, really fast.
Did you see it before you purchased it?
I did. When I viewed it, it was like fully furnished. So a lot of the were basically hidden, I would say. I did get the inspection report, but first time home buyer.
Yeah.
Under a lot of pressure, it's not a bad area. I could do it. And then after having a baby, the more she grow, it's just like I can't. Because I always had intentions of keeping this home and maybe renting it out when I did leave. But it's too many things that needed to be fixed that I just could not afford to fix. So.
For sure. That's exactly what I would do with this one. Was I would rent it out. The thing was, it's gonna cost a pretty penny though, like for some of these repairs. And the thing is, like, cosmetic is different, but we got some foundation issues. There was previous termites, which you just purchased it, so they do have to fix it. I know they spent probably some thousands on that. And then when you send me the receipts, I'll be able to know that more. Yeah. But it was kind of concerning me. It says there's evidence of fire damage, and then like this is like real visible foundation issues where I may have to get a structural engineer involved. So I'm talking, anytime you talk about engineer, we're 10,000 plus now at this point. Just for them to come out, it's gonna be like 3K. So that's where it gets a little tough as far as making numbers work. Now, I'm interested in it, I will say. And I don't want you to have to do a deed-in-lieu, because why? You know, no reason to do that. So what I would do is I would purchase it with what's called a creative financing structure. Are you familiar with what subject to is?
No.
Okay, cool. So I'll explain it to you. So subject to means subject to the seller's existing mortgage. So if you're in the military, you know what like a VA assumption is by chance? Very similar. Almost think of them as like the same way. But an assumption, you have to be a veteran. I'm not a veteran myself. See, I couldn't be I tried, but they didn't let me to mess because I have heart murmur. Yeah, so I'm not a veteran, so I can't do assumptions, but what I do is I purchase properties creatively with subject to owner financing, things like that. And subject to basically means I take the terms that you have. So your interest rate, I would take that. Now, for you, it would look like a traditional sale. Like you wouldn't be dealing with the property or anything like that anymore. I would take full responsibility of the property. But here's the kicker, the mortgage still stays in your name. Now,
I do know what this is.
Yes, this is a good thing for you though. And people may say it's not, but I'll tell you the positives of it. One, your credit score is just gonna constantly boost. If you do a deed-in-lieu, it's gonna hurt your credit score. You know, if you do foreclosure, if you stop paying, they foreclose on it, obviously it's gonna hurt your credit score. So this is good because your credit score is gonna keep on going up.
So basically, I'm gonna put it to my best understanding. Mortgage is still in my name, but someone else is paying it.
Exactly.
Okay.
And I'm responsible for everything.
So now, what happens, say, if that person does not pay it?
So I have a clause in my contract basically states that if I miss one payment, the home goes back to you. So it'd be a dumb financial mistake for me to do that. You know, if I miss one payment, think of it. We're in this agreement, let's say 10 years down the line. Okay. 10 years, I've been paying it for 10 years. You got a bunch of equity in the house. And let's say, God forbid, I get hit by a train and, you know, I don't have things set up properly. Obviously, I don't make the mortgage payment. Well, what happens to you? Okay, you get the home back with 10 years of equity built up. And at that point, you can rent the home out. You can do whatever you want with it. You could sell it, make a lot of money, or vice versa. Let's say I miss a payment like within a month of it. You're back in the same situation that you were before. So it's a win-win for you basically, because it's not going to cost you any money. I would pay all your closing costs at closing and I would handle all that. Okay. So you'd be able to walk away scotch-free versus the deed-in-lieu option. Right. It's a penalty when it comes to that.
I know.
So that's basically subject to, explained very briefly. And like I said, for you, you don't really have any ties to the property anymore. Like I will log into your portal and I will be making your payments, doing all of that. And yeah, like let's say I have a renter in there, they get hurt, something like that, that would fall on me. Let's say I purchase the property and the house burns down. Well, it's on me to figure that out, or that I would put my insurance on it and everything. So that would be the subject to structure. And of course, like I said, I would pay all your closing costs at closing. I will also make sure your agent gets paid, and that's how we would go about it. And you're able to walk away scot-free from the home.
Okay, I'm at the point I just need it gone.
Okay.
Basically.
So what I would do is I would purchase it as is also. You don't have to worry about making any repairs, anything like that. And we could close probably by the end of this month. Let me check my calendar. 7/14/21. Put the 31st. We could do that. And then what I'm gonna do is I'm gonna walk you through the contract, because you've heard of this before. You said, so that means somebody probably presented it to you at some point.
What you're talking about?
Yeah.
I think we did have some offers that way that
I
didn't take.
Yeah. Okay. All right. So PSA. So we did some research, and it looks like a lot of people that are watching, you're not subscribed to the channel. So please do me a favor, because I'm giving you guys these free videos, free high-level information on real estate and real estate investing. Please, just for me. All you gotta do is click the subscribe button, just subscribe to the channel. Oh, also, just bonus, just share it with a friend who can find this helpful. Thank you. Thing is, this can be confusing, and a lot of people will be like, oh, is this a scam and things like that, and it's because they haven't heard of it. But when people say they haven't heard of it, you got to think, why haven't you heard of it? You've heard of a regular mortgage, because who promotes regular mortgages? The banks. Who has all the money? The banks. It doesn't benefit a bank at all when people do this. It's like a loophole in the system. But this is how investors are able to stack up a lot of properties, and why I don't care anything about tariffs or interest rates or anything like that. It's because of this method right here. So yeah, this is a real contract. So what happens is once we sign this, I would send this off to a title company as regular. We would still do the regular closing. All right, so I'm gonna walk you through the first page right here. So there's two parts. We'll do this because it's gonna be quick. So purchase agreement and a receipt for earnest money. Buyer Assets Investments LLC, that is my LLC. Put your name as the seller, we put the property address. Buyer agrees to purchase. Right here, we would need whatever your payoff is, would go right here. And then see addendum would be this right here. The earnest money is $1,000. I submit that to the title company, which is going to be Fortis Title and Escrow. Closing will take place on or before 7/31/25. Buyer to pay all normal and standard closing costs for buyer and the seller. So I'm paying my closing costs and your closing costs. Only thing you're responsible for, like if you owed any taxes, any unpaid water bill balances, stuff like that would be up here, or any costs associated with clearing a clouded title. So for example, when you purchase, you probably should have purchased with title insurance. I don't remember if you did or not.
Yeah.
You did?
Insurance?
Title insurance. More than likely, it usually gets automatically up there. If you have a copy of your Alta, I can check, or your CD, like your documents that you sign at closing, I can check for you.
Thumb drive.
Okay, yeah, I can check for you on that, no problem. But that would cover you in the case of a clouded title. Because let's say that, it came about that, 10 years before you purchased it, there was a mechanics lien on the property. You as the current owner, when you're trying to sell it, you would be responsible for it, but title insurance would save you from that cost. So that's the reason why we always tell people to get title insurance.
Take a picture of this?
Yeah, of course. Take anything you want. And I'll also send you a signed copy of it too. Buyer possession, it'll be 5 p.m. of the day of. Condition inspection contingency. So buyer obligation to purchase property is contingent on buyer's approval of the physical inspection of the property. Buyer shall have until closing to complete its inspection of the property and shall have access to the property for inspections. Buyer is not satisfied with inspections. Buyer may terminate this agreement. Seller notice by giving you a proper notice. So one thing I am going to do, I'm going to get a crawl space inspection for this property. I don't need a regular inspection. One, utilities are off and I'm not going to make you pay to get them on. But I definitely need a crawl space inspection. If the condition is satisfied or waived by the buyers, or buyer does not close on the business date of the closing date, I will forfeit the earnest money deposit. So that $1,000, I would lose that. That would be given to you as liquidated damages. If you fail to complete the transaction, the earnest money will be refunded to me, and there's nothing that will happen. Kind of one-sided. Deed shall be conveyed to buyer on the closing date to the warranty deed, so that's just regular deed. Real property taxes for the current tax year and other items shall be prorated. Time is of the essence. Okay, so seller represents and warrants to the buyer that the sewer line is intact and in good working order?
Yeah.
Okay. Do you know of any material structural defects in the property other than what you told me?
I do not.
Okay. So this saying the property is sold and purchased as is. All representations and warranties in this agreement shall survive closing. Seller has accepted this agreement on seller's own determination of the property's value and has not relied on the representation of buyer regarding its value or marketability. So basically that's what that's saying is you have been able to do research on your property's value. You're not going off of what I said. Intent. Okay, this is big right here. Seller acknowledges buyer is engaging in real estate for a profit and is purchasing the above property with those intentions. As such, seller agrees to allow buyer to potentially utilize partnerships, joint ventures, assignments, the multiple listing service, and any other means in order to facilitate the optimal way to maximize profit as buyer sees fit. It is recognized that members of the buyer's companies are licensed real estate agents in the state of Virginia. So that's like kind of fancier jargon. What that's basically saying is that I'm in real estate for profit. I do any deal to make money, and I have a variety of ways, whether that's the MLS, whether that's partners, whether that's novations, anything like that. Where I can do to make a profit, that's what I plan on doing with this specific deal. Also, I am a licensed real estate agent. I also own a brokerage here, so giving you that disclosure. This agreement is binding on seller, buyer, their heirs, legal representatives, assessors, and assigners. In the event legal action is taken to enforce any terms of the agreement, the prevailing party shall recover from the losing party reasonable attorney fees incurred as set by trial court and the appellate court. So that's pretty self-explanatory. And notices of the agreement shall be given using this contact information. So you just fill out that contact information there. And notices would be like if the title company needs to reach out to you for anything, more than likely, or if I need to reach out to you for anything. And then this agreement sets forth the entire understanding of the parties with respect to the purchase of the property. And it may not be altered except in writing and signed by both parties. So a common thing for that is like if we need to push this closing date back, what we would do in that instance is we could either do wet signatures, so we could come out to the property, we would change that and initial by any change, or we could do a DocuSign, whatever works. But anytime a change is made, it's just crossed out and initial by both parties. So that's the first phase right here. All right, ready to get to the meat and potatoes?
It's hot.
Yeah, it is hot. All right, this is going to take a little bit. So a lot of this is repetitive, so I want to explain it thoroughly, but also, like you said, it is hot, and I'm not trying to, have melting. All right. So addendum subject to, so dated, we would date there. We would put the property address and we would put your name as the seller. Similar to that one, we would put the payoff would go right there. All right, so first off, we started with talking about the subject to due on sale clause or due on sale acknowledgement. So I'm the type of person I like to prepare for worst case scenarios ahead of time. And due on sale is the worst case in the subject to loan because per the terms of your mortgage, it's supposed to not be assigned. It's supposed to just stay in your name. But like I said, this is not illegal. It's just a loophole in the contract. So what could happen is if your mortgage company does find out that you've sold it subject to, they could trigger the due on sale clause. So this is just acknowledgement stating that, and it says what is to happen if that is to occur. That's worst case scenario. I've had many ones in which the lender is aware of what's going on, especially if you're talking about dealing a deed-in-lieu situation. At the end of the day, the bank, they just care about getting their money. They just want to get paid. So it's like, it doesn't matter who's making the payments, as long as somebody's making the payments, they're cool. And as long as, nobody's, that's just the biggest thing is just making the payments on time. All right, so buyer has entered to a certain purchase and sale agreement and all parties fully understand, acknowledge, and agree that seller and buyer are aware that the mortgage/deed of trust securing the property described in section 1 contain provisions prohibiting the transfer of any interest in the property without satisfying the principal's balance remaining on the underlying loan and obtaining the lender's written consent, i.e. the due on sale clause, and this transaction may violate said mortgages. That's what I was just telling you about. Seller specifically understands that the loan payments will not be paid or will be paid on a monthly basis by the buyer, and that the loan will not be assumed or paid off completely at closing, and that the loan and loan payments will remain in the seller's name and may continue to appear on the seller's credit report. Remember, like I was saying, that's a good thing for you there. Questions?
I want a picture.
Yes. You can take pictures of all the pages.
You said these are coming to me too, right?
Yeah, as soon as you sign, I'll send it over to you.
So this is technically not like selling it.
It would be. So for you, it's like a real traditional sale. Like we would still go through the title company, go through all of that The only ties that you would have to the property is you're going to get emails saying your credit score goes up every month.
Okay, this is the thing that I don't understand. So like if you're buying it, right?
Yeah.
Let's say my payout is like 246. I think that's what it is now. 246. Something like that. Where do you put the 246 if you're not
Great question.
closing it?
So the best way to think of it is, so we put the payoff amount just kind of as the number there, but how it'll look on the HUD is that number, basically it'll say taken subject to seller's existing mortgage. So that 246 is still going to stay there, but I'm the one that's responsible for it at that point. So like I said, the mortgage is still going to stay in your name. Like if you go to look for the mortgage, it's still going to state your name. You're not responsible for it at that point because I'm the one that's making the payments for it. So yeah, it doesn't get paid off completely. If it got paid off, then yeah.
Yeah, it wouldn't. Okay.
Yeah, exactly.
That's why I'm a little.
Okay, which makes sense, you know. That's what I'm here for, to explain, explain it. So your question is more so like, why doesn't it get paid off completely?
Yeah, like if it's kind of like I gave you the loan.
Exactly. That's exactly what it is. So if it was like let's say a traditional buyer, somebody who got pre-approved with Navy Federal or something, if they came in to purchase it, well, what happened is at closing, they would pay off your existing loan and then their new loan on the property. But for this one, instead of there being a new loan on the property,
the loan.
Exactly. But the title is in my name. The deed and title would transfer over to me, and that would make me responsible for it. So like when it comes to insurance,
I'm concerned about is if they would allow it.
They do. It's just like I was telling you, it's like a loophole in it. So I own 8 houses right now, and all of them are the same way except one. And that was my first one that I purchased. So banks are pretty on board with it, and then like we'll get into it. Like let's say they find out and they go against it. They're like, oh no, we're not having this. What they could do is a do on sale clause, but I'll tell you exactly what happens in that case. So yeah, you're good. You're good. No, you're all good. I love the questions. This is good for the video because people are gonna, if you have these questions, other people are gonna have these questions. All right. So yep, explained that there. Seller and buyer execute this disclosure form after having the opportunity to seek legal counsel as far as the legal and financial implications of the due on sale clause, including the mortgage / deed of trust. The parties agree and understand that if the due on sale clause is enforced by the holders of said mortgage, deeds of trust, the entire balance then due under mortgages must be paid in full. In this event, the seller understands that as mortgages are not paid in full, the lender can file a notice of default on the property and reports such as the credit bureaus affecting the seller's credit report. Buyer understands that in the event the underlying debt is not paid in full, the lender holding the deed in trust may foreclose the property, which will extinguish buyer's interest in the property. All right, this is a scary paragraph right here, so let me break it down. One, like I said, we always try to put in worst case scenarios, so that's why it is worded that way. But second, we're gonna get into, literally the next page, what happens to eradicate that in case they do on sale clause. Like I said, I have 8 right now, and I've never had a due on sale clause, and my mentors, they have thousands, and somebody has had a due on sale clause before, but they was messing up. They weren't making payments. That's the reason why that happened. Like I said, at the end of the day, the bank, all they care about is just getting paid. So if they're getting paid, they're not tripping. In the event there's an escrow account for taxes, insurance, waste fees, association fees. There's no HOA here, right?
No.
Okay, cool. Where any impounds or escrow said funds shall be transferred to the buyer without adjustment. The current loan balance and prepayment penalty shall be deducted from sale proceeds. If there's an escrow shortage, then the same shall be charged to the buyer. Seller shall identify, defend, and hold harmless the buyer and all persons or assigns regardless of responsibility from all costs, expenses, suites, liabilities, damages, attorney fees, claims of every type, including but not limited to those arising out of injury to any person or damage to any real or personal property to any person, including the borrower and said financial institution, for any items resulting from the buyer borrowing the property, information furnished by the borrower, or those items relating to the financial information or the ability or inability to pay for or support the debt for which the buyer is agreeing to. So basically what this is saying is like when I purchase property, like let's say when I purchase a property and a kid falls and they break their arm, technically like if this was your house, like if you were here, you hadn't done this agreement, you could that kid's parents could technically sue you as the owner. But because I'm the one that's on the property, they would sue me because I'm the one who has the deed for the property. But this is to say, like, if you find out about it, you can't be like, well, I still have the mortgage, so I'm going to sue you also.
Oh,
Yeah, so it's basically to protect against that. Okay, seller agrees to provide buyer with a clear copy of the most recent mortgage statement within 24 hours of the executed offer. The mortgage statement is to figure out all the terms and such of your mortgage, and then it would be signing right there. All right, let's get into this due on sale clause, which you want to really know about. All right. Skip this. This is basic. Capitalized terms not expressed in the addendum have the meanings given to the contract. All right. So this is the paragraph that I read to you before. So the parties acknowledge and agree that the buyer is acquiring the property subject to the seller's existing loan. This means that the existing loan will not be paid off the buyer's purchase of the property. The parties also understand, acknowledge, and agree that the deed of trust securing the existing loan have a due on sale clause, which give the lender the right to accelerate the balance due under the existing loan upon the sale, transfer, or conveyance of the property from the seller to buyer. In the event any lender for the existing loan invokes the due on sale clause and sends notice to the same of the seller, and to the extent allowed by documents for the existing loan, the parties agree to as follows. So, okay, let's say you do get the due on sale clause. What will happen then? Seller shall provide buyer with a copy of the lender's notice invoking the due on sale clause within 5 days of the seller's receipt of the due on sale clause. Okay, what do? We do a lease agreement. So within 10 days of the buyer's receipt of a copy of the lender's notice invoking the due on sale clause, buyer shall prepare and the seller as landlord, lessor, and buyer as tenant or lessee shall execute a residential lease agreement that has a term equal to the time remaining on existing loans to have been paid in full upon the existing loan's schedule or until the existing loan's maturity date, whichever is earlier. So basically, instead of a 1-year lease agreement, we do a 30-year lease agreement. And then the monthly rental payments under the lease shall be equal to the combined total of the monthly payments of the existing loan, and any monthly payments to be made under any loan owed by the buyer to the seller and secured by the property if such loan is provided for the contract. The annual property taxes and insurance for the property divided by 12, only if such amount is not included in the monthly payments, blah, blah, blah. So yeah, so basically this is what it's saying is, all right, so our lease term would be 30 years or however long you have left on your mortgage, and then the monthly payment would be equal to whatever your mortgage is.
So it's like you renting it.
Exactly. Okay. Yeah, that's exactly what it is, the lease agreement. And the lease shall provide that the buyer shall be responsible for all maintenance, repairs, upkeep, and improvement of it. The lease shall require a seller to make all monthly or other payments on the existing loan or in buyer's discretion. The payments under lease shall be made to a servicing agent who shall be required to make the payments by the buyer under the loan to make all monthly and other payments on the existing loan. Buyer shall be responsible for all costs and other amounts charged by the servicing agent. We would more likely do the servicing agent if that was to happen. But the way it's going to be like that is because if your due on sale clause is triggered, then they're going to be like looking at it tight and be like, okay, who's making the payments? The buyer can't be making the payments. Okay, all right, so that's the lease agreement, but it also is going to have an option agreement, so it's going to be a lease option. So option agreement states within 10 days of the buyer's receipt of a copy of the lender's notice invoking the due on sale clause, the buyer shall prepare and seller as an optioner and buyers of optionee shall execute an option to purchase agreement which provides the buyer the exclusive right to purchase the property from the seller for an amount equal to the combined total of the then current principal balance of the loan and any loan owed by the buyer to the seller secured by the property if such loan is provided for in the contract, the option purchase. And the option purchase price shall continue to be reduced by the amount equal to the principal reduction of the loan resulting from any monthly or other payments made on existing loan. So let's say we get into this agreement, due on sale clause gets hit within a couple months. All right, well, our payoff is still like 240 something. So we will write an option agreement for 240 something. But let's say it's 10 years down the line. Well, it's not gonna be 240 something. It's gonna be like 100 something or less 10 years down the line. So the option price would be whatever is owed. Perfect. The term of the option shall expire 60 days after the term of the lease. So remember, this is a 30-year lease, so that's why it'll expire, because there's no need for the lease at that point because the mortgage is paid off. So yeah, the option shall immediately terminate and be of no further force and effect upon the entry of an order of a court of competent jurisdiction finding that the buyer has breached the lease and evicting buyer from the property. So if I miss the payment on the lease, for example, then this goes out of effect. So like I was saying, like, it's just a win for you at that point. It would be a stupid financial mistake for me to miss a single payment. The option shall be assignable by the buyer / optionee without the seller's / approval or consent. And then the satisfaction of loans owed to the seller, if any. Okay, so upon the parties' execution of lease option, any loan owed by the buyer to the seller and secured by the property as may be provided in the contract shall be deemed satisfied and released, as the monthly payments for such loan shall be included with the monthly rental payments under lease, and principal balance of the loan is included in the option purchase price. All right, any questions about this part?
I have so many.
Okay, let's do it.
Okay, so back up here.
Yeah.
Also, this is still talking about like if we do the lease.
So this is this whole part right here is about due on sale clause.
Okay.
So this is the lease part right here, all of that, and then this is the option agreement. So technically, be a lease option. B is we would sign a lease agreement, but you know how traditionally, like, have you ever rented a property before?
Yeah.
So, like, you can't buy your rental property.
No.
Like, you just don't have that option. But you option.
You still, okay.
Exactly. Does that kind of...
Yeah, that's... I just...
Perfect. Yeah, because this is a very rare instance, but I always like to start off the contract with that because, like I said, I'm a person, I prepare for the worst, if anything, because, hey, if we both know the worst and worst comes to worst, all right, cool. But if we didn't prepare for the worst, then we're kind of stuck in a bad spot. So again, due on sale is very, very rare, but I already have it planned out exactly what is to happen. Okay. And this is a foolproof method. They would do the due on sale clause because they think that, you know, you've sold it and yada, yada. But with this would show, okay, you are the owner of it and I'm just paying to you like a tenant. So how can they have no means to further continue. Okay, satisfaction of loans we talked about. Are we good to move on? You still
I'm good.
Okay, perfect. So warranty deed to the seller. So basically saying that it's a warranty deed regardless, either or. And warranty deed is the same as just regular. Parties, acknowledge and agrees that buyers acquiring the property subject to the seller's existing mortgage secured by one or more deeds trust against the existing loans, which means that existing loans will not be paid off through the buyer's... You're going to see this paragraph a lot. It's repeated like 5 times through here. The existing loans will remain outstanding in the deed of trust. Securing the existing loans will remain as liens against the property. By purchasing the property subject to the seller's existing loans, buyers not assuming seller's payment obligations on the existing loans, seller shall remain liable and obligated for the payment of the existing loans, and this existing loan shall remain in the seller's name. The parties also understand, acknowledge, and agree that the deed of trust securing the property, existing loan has a due on sale clause, which allows the lender for the existing loans to initiate a foreclosure proceeding for the property due to sale, transfer, and conveyance of the property from seller to buyer. So this next paragraph, you're going to see CLE a lot. CLE means close of escrow. So prior to close of escrow, seller shall execute an authorization to release information in favor of the buyer to allow the buyer to contact and obtain information from the lender for the existing loans. The original authorization to release information shall be updated and maintained by the buyer. The seller authorizes buyer to ascribe a date on the seller's behalf to the original or any copy of the authorization to release information in order to meet the lender requirements. So big reason why we need this is, one, I need to be able to log into your portal to be able to make your payments. But also too, like, if something is to come up, like for example, when I put my insurance on the property, if I just call the lender, they're gonna be like, who are you? We're not talking to you. Like, we have no reason to talk to you. Okay. But when we have this form, the authorization form with your signature, it's gonna say, okay, we're cool, we're good to talk. Like, the first time I did this, I was concerned because we had that exact moment come up where I had to actually call the bank to get an issue resolved. And it was no problem at all because I had this form and they asked, like, what is my role? And I said, I forgot what I said. I think I'm a servicing party helping out the sellers, helping out on the seller's behalf. They're like, okay, cool. They got me the information, and years later, we're still rocking and rolling. All right, so prior to close of escrow, seller shall execute the following documents: the authorization to release information in favor of the buyer to allow the buyer to contact and obtain information from the lenders to the loan. Notice of change of address to be delivered to the lenders for the existing loans, which will affect buyer's street address, email, and phone information. So we are going to change the phone number and we're going to change the email in the file because, one, you're not making the payment. Why would you still want all these emails and statements? There's just no need for that. And also, I need to be aware of what's going on. So a common thing that happens at the start of the year is your escrow will change. Typically, like, let's say there's an escrow shortage the previous year, that means your payment will go up because of an escrow shortage. That's something that I need to know. And if I don't have my stuff on it, how am I know? You wouldn't know. Exactly. Yep. So notice of change of address to be delivered to any insurer providing or provide insurance coverage for related to the property. Notice of change of address to be delivered to any homeowners association governing the property. Escrow letter containing instructions to the lender of existing loan as to the application funds held by the lender in its escrow account. Limited power of attorney. Appointing buyer as the seller's agent for the purpose of providing for and arranging insurance, making and accounting for mortgage payments or any other matters pertaining to that property. Seller shall execute an assignment of insurance proceeds in favor to the buyer, which assigns all of seller's right, title, and interest in any insurance proceeds to be paid by any insurer for the property to the buyer. This is a question that people ask, so like, why do I have to do this? Well, if I'm the one that's, have my insurance on the property, I'm the one that's making payments, it wouldn't be fair that if something goes wrong that you get the insurance made out to you. Like, it just wouldn't make any sense. The originals of this document listed above shall be undated and maintained by the buyer. Seller authorizes buyer to ascribe a date on seller's behalf to the original or any copy of the above documents in order to meet the lender requirements. Buyer and buyer's sole and absolute discretion is authorized to keep and maintain any insurance in place covering the property upon close of escrow and to add buyer as an additional insured under such policy, or to secure or additional insurance in the name of the seller or buyer. Buyer shall be named as the primary insured or additional insured on all insurance policies in effect covering the property after close of escrow and buyer's absolute and sole discretion. Buyer is not hereby assuming any duty or obligation to pay for and maintain insurance to the property. It is in buyer's sole and absolute discretion to keep, obtain, or maintain insurance for the property. So what I do typically is I don't keep your insurance most of the time. Yeah, I put my own out as you as an additional insured because you still have to be on an additional insurance because it's still the mortgage is still in your name. So seller shall hold buyer harmless and hereby release buyer from any and all liability in the event buyer decides not to keep, maintain, or obtain insurance coverage for related to the property. All right, seller shall cooperate with the buyer and execute any and all documents buyer or any insurance company deems necessary for buyer to be named as primary insured or additional insured on the property. All insurance proceeds that would be otherwise be payable to the seller for any loss occurring to the property after close of escrow shall be paid to the buyer, and seller hereby conveys and assigns its right to any insurance proceeds to the buyer. Seller shall execute any and all checks or documents necessary for the insurance proceeds to be paid by the buyer in the event of a loss related to the property. So this we'll talk about a little bit more, but the big thing with this is instead of just a traditional sale where it's like, okay, you never speak to that person, we will have some sort of relationship. Like we're not gonna, talk every day, but like, if something comes up, like for example, literally today, I had one that I purchased last year. She just got this letter in the mail. I think the payment went up and then she had just sent it to me and was like, hey, like this is going on. So yeah, it's all.
So why would a payment go up? Just
taxes. Or escrow shortage. That's more, it's so annoying because like there's nothing you can do about it because the bank sets what your escrow is. Like you don't, you could pay over, but why would most people don't? There's no need to do that. So like if your taxes go up or your insurance goes up, then if you, let's say you have 5,000, that's low. Let's just say 5,000, whatever. 5,000 per year was set for your escrow and your taxes were supposed to be 3,000 and your insurance was supposed to be 2,000. But what happens if your taxes go up to 4,000? Now you have $1,000 escrow shortage. And what they'll do instead of, you can pay it all at once, that escrow shortage, but typically what they'll do is they'll prorate it over a year span. But
that's how it is now for me, being that I pay it included.
Yeah, exactly. Yep. So as long as you're paying it included, which how most people are, that's what would happen. So like take that example again. So instead of having to pay 1,000 up front for the escrow shortage, they would do 1,000 divided by 12. And then whatever that number is, let's say, I don't know, $50 just for example, that $50 gets added to your monthly mortgage payment. That's what makes your mortgage go up. So that's when like people, I've seen it all the time, like on TikTok especially, they'll be like, I brought this new construction home and my payment went up like $2,000. It's not necessarily a lie, but it's kind of a half truth when people be like, you purchase a house and your payment will never go up, because it can go up. The thing that's going to be fixed is your principal and interest. Unless you refi, your principal and interest are always going to stay the same, but your taxes and insurance more than likely will go up. Exactly. Okay, cool.
This is my first time hearing that.
All right, buyer representations and yeah, you said that's your first time hearing that? Oh, wow, dang, that sucks. I think the great thing about me is before I was an investor, I was an agent for years. So like, I know all the stuff that goes on when it comes to that. So like I've seen buyers, unfortunately, they're like, dang, I didn't know this happens. Or even when I bought my house, I was like, dang, I didn't know this would happen or stuff like that. So I always like, as you see, I like to give as much information as possible instead of being like, here's this contract, sign it, Buyer representations and warranties. I'll go through this quick because this is just, me. Buyer hereby represents warranties covers with understanding that seller is relying on such representation warranties and such representation warranties survive close to escrow that buyer is aware of and fully understands the terms of the contract, this addendum, and the nature of this transaction contemplated thereby. Like I said, I breezed through this because I would hope I understand because I wrote this contract. Buyer understands that the property is being acquired subject to the seller's existing loan secured by one or more deeds of trust against the property. This means that the existing loans will not be paid off through buyer's purchase of the property. The existing loan will remain outstanding and the deed of trust securing the existing loan will remain as liens against the property. Buyer understands, acknowledges, and agrees that the deed of trust securing the existing loan contains due on sale clause, which allows the lender to call the existing loans upon transfer of the property to the seller. Foreclosure proceedings will be initiated in the event that the lender invokes the lender's right under due on sale clause. Buyer understands, acknowledges, agrees that in the event, buyer will need to assume the existing loan or pay off the existing loan, but is not required to do so to avoid losing the property of foreclosure. In the event that the seller has not breached the contract and the lender invokes the due on sale clause, buyer shall hold seller harmless for any loss or damages which may occur as a result of lender's foreclosures. All right, so those are my representation warranties. Let's get into yours and then your disclosures, and then we're almost done, or we're pretty much done. All right, so in addition to seller representations and warranties and contracts, seller hereby represents, warrants, and covets with the understanding that the buyer is relying on such representation and warranties and such representation warranties survive close escrow that 1. Seller is aware of and fully understands the terms of the contract, this addendum, and the nature of this transaction contemplated thereby. Seller will not make any statements or engage in any that will cause or is likely to cause any lenders for the existing loan to initiate foreclosure proceedings with respect to the property or take any action adverse to buyer or buyer's ownership of the property. We're going to come back to this in a minute. Seller will not make any statements or engage in any conduct that will result or is likely to result in the cancellation of any insurance for related to the property. And both during and after the seller's performance of the contract, the seller will, on demand of the buyer, execute and deliver any instrument, furnishing any information, and to perform any other acts reasonable necessary to carry out the provisions of the contract and its addendum without undue delay or expense. So an example of that, let's get the due on sale clause, for example. So this is basically saying, like, if you get the due on sale clause, that you would submit it to me in a timely manner, that you wouldn't just hold it, because that would hurt both of us at that point. All right, seller discloses acknowledgements. No further ownership or control. Seller understands, acknowledges, and agrees that upon close of escrow, seller will no longer have an ownership interest in the property and no further control over the property. Always have to state that clearly, because it can be a bit confusing if you see that mortgage still in your name, like, well, you know, this is my house. No, it's not your house anymore. The mortgage is still in your name though, but how I like to say it is the deed, who's ever on title is the one who owns the property, who controls the property.
That would be you.
Exactly, so that would be me. So not alone. Seller understands, acknowledges, and agrees that the contract results in an outright purchase of the property by the buyer and is not intended to be a loan by the buyer to the seller. Existing loans not paid in full. So just like we said earlier, seller understands, acknowledges, agrees that existing loans for which the seller is the borrower will not be paid in full as a result of the transaction. Continuing liability on existing loans. Seller understands, acknowledges, agrees that no promises have been made to the buyer to the seller that existing loans will be assumed or paid off by the buyer, and that upon close of escrow, the seller will remain liable on the existing loans. No longer deduct mortgage interest. Okay, so seller, so this is what you're gonna change the address, so it'll go to me, but it'll still be made out in your name. So we'll kind of have to figure that out. Seller understands, acknowledges, and agrees that the seller cannot deduct mortgage interest paid by the buyer, even though the seller may continue to receive a Form 1098 from the existing loans. So that's one of the benefits you get as a homeowner. You get your mortgage interest at the end of the year. You can use it as a tax write-off. The thing is, you're not paying the mortgage anymore. Exactly. Failure to make timely payments. Seller understands, acknowledges, and agrees that the buyer's purchase of the property does not indeterminate seller's obligation to make full and timely payments of the existing loan. Event of foreclosure. Seller understands, acknowledges, and agrees that in the event the existing loans are not paid, seller will be subject to foreclosure proceedings, and such proceedings may harm seller's credit. Existing loan on credit report. Seller understands, acknowledges, and agrees that the existing loan may continue to appear on seller's credit report and may impact or affect seller's ability to obtain other financing or loans. Due on sale clause. Seller understands, acknowledges, agrees that the deed of trust for the existing loan has a due on sale clause, which allows the lender to initiate foreclosure proceedings for the property, which may affect seller's credit. Okay. Property insurance proceeds. So similar to mortgage and mortgage interest, like if somebody gets hurt in here and they have to pay out or the house burns down, that money goes to me. So seller understands, acknowledges, and agrees that any insurance proceeds related to any loss of the property occurring after close of escrow shall be paid to the buyer. Seller shall not be entitled to receive any insurance proceeds for any loss on the property occurring after close of escrow. Maintaining property insurance. Seller understands, acknowledges, and agrees that buyer is not assuming the seller's obligation to keep and maintain insurance for the property. It's in buyer's sole and absolute discretion to keep, obtain, or maintain insurance for the property, and seller holds buyer harmless and releases buyer from any and all liability in the event buyer decides not to keep, maintain, or obtain insurance property or related insurance coverage or for related to the property. Almost done. Buyer's option to execute quitclaim deed. Seller acknowledges and agrees that at any time after close of escrow, buyer may at buyer's sole and absolute discretion tender quitclaim deed to seller subject to the seller's existing loan. Buyer may, in buyer's option, record the quitclaim deed with the county clerk or recorder's office, but is now no way obligated to do so. That wouldn't benefit me to do that. Harm to buyer due to tampering. All right, this is when I said we're gonna come back. So this is one that originally wasn't up there, but we had a situation with one of my mentors when he purchased a property from a seller who was behind on their mortgage. They were like 4 or 5 months behind. Property was about to, or the bank was about to foreclose on their property. They had like, I don't know, like 10,000 or so in arrears to get them caught up. So seller is like, okay, instead of the bank foreclosing on your property, I'll buy your property, I'll pay the bank to get it current. And that's what they did. So they paid those arrears and they also paid the seller's closing costs. Now what happened is 6 months after that, when the seller wasn't in a bad spot anymore, the credit was going back up. You know, they didn't have the bank on their tail all the time saying they were going to foreclose on the property. The seller was like, well, I wanted to keep the house. And
wait.
Yeah.
I'm not going to do that.
Yeah, the seller was like, I want to keep the house.
Yeah,
and
I don't pay.
Yeah, exactly.
No, I'm telling you.
You said what?
I no longer
pay what?
For the home.
Okay. So you have arrears?
Yeah.
Okay. I should have asked that. Okay. How How many months have you missed?
When did I move out of here?
Last month.
So you're just 1 month behind?
No, I stopped paying the month before.
Okay.
Like,
4 months?
Yeah.
Have you got an auction date or anything?
No, this is this is our conversations with them were.
So your last payment was in March?
Yeah.
Or did you pay March or February?
I remember.
Okay. When you log into your portal, you should be able to see it.
And see how much?
Yeah, your statement should also say the amount to make current.
Yeah. So this was, I think it was 8.
All I hear is cha-ching. I hear so much money coming out my account right now.
I'm sorry. I wasn't gonna keep paying for a house. I didn't want to stay.
I got you. Hey, it's a good thing we got connected though. Phew. Okay. Good thing. Because yeah, especially 4 months.
So yeah, 4.
They might have started the foreclosure procedures.
No, because I didn't like just stop paying them. I always contacted them.
Okay.
I kept up with them.
This
was just, first they told me to rent it out.
Yeah.
But I still would have to fix everything.
Yeah.
So I just decided to sell instead.
Did you do any loan adjustments or anything like that?
No.
Okay, perfect. Okay, good. All right, so kind of going back to the story. So similar instance, right? Where at that point he came back, he's like, well, I actually want the house. And my mentor was like, well, I had to pay all this money. Like, I can't give you your house back. It doesn't work like that. And the guy was like, all right, well, I know about the due on sale clause. So what I'm gonna do is I'm gonna go to the bank and I'm gonna tell them you did this. And if I can't have the house, nobody can have the house, basically. And he did that. But guess what? The bank didn't care. The bank was like, okay, screw you, basically. You weren't paying us any money, but he's paying us money, so we don't care. And the thing is, that was a good scenario in a sense, but what could have happened? The bank could have triggered a due on sale clause. That could have messed a lot of things up for a lot of people and cost for both parties, exactly, and cost people a lot of money. So he thought, all right, what can I do to make sure this never happens again? Because the reason he did that was because there was really no penalty. Like, you're not supposed to do it, but it's tough, like, to kind of enforce that. So that's why we put this clause in here, which is a harm to buyer due to tampering. So right here, this clause states that seller acknowledges that the buyer will be harmed if the seller tampers with the mortgage and insurance. And seller acknowledges and agrees that because the buyer is harmed, that a $50,000 judgment will be placed on seller's name if the seller tampers with the mortgage or insurance.
So y'all gonna sue me?
Yes, and because it's already here, right here, it's gonna be a very close case.
I'll sign that first.
Yeah, exactly. So the thing is, as long as you don't tamper, which any person in their right mind wouldn't.
I'm leaving here next year.
Yeah.
Don't worry about me.
Then we'll be good to go there. And then acknowledgement of disclosure. So seller acknowledges and agrees that the seller has reviewed and understands disclosures made to seller regarding the subject to sale of the property to the buyer, that selling the property to the buyer is in seller's best interest and agrees to be bound with the terms of the contract and all addendums thereto. Congrats. We made it. We didn't melt. We almost did, but we didn't melt completely. All right. That is a long contract. What questions do we have before we get?
I need to look over everything again.
Yeah.
I'm sorry.
You're good. Take your time.
This is the only thing that I know, like, you wouldn't do. I don't know, actually. But I'm just concerned, like, about, like, let's say, like, if
something happened to me, you would get the house back and be in the same position. Actually, you'd be in a better position, one, because you wouldn't have any arrears. So let's say...
I mean, yeah, but I don't want it. I don't want it at all.
Yeah, which is, I wish I could give you a better answer.
I know.
But it's not really much. I mean, the worst case scenario is actually a good thing for you in a sense, especially because so the worst case scenario, let's say I brought this house and then I died next month.
Yeah, come on.
Yeah, that's literally the worst case scenario. Well, at that point, that's not a good thing, but it's a good thing for you because you have, you have a little bit of that balance paid down, because even though it's 1 month, at least a little bit is paid down, and also all your arrears that's been wiped away, so now you're current. So that's literally the worst case scenario, which is a good thing for you.
Not really, because I want it.
But you're in the same spot again.
That was a good thing for that man that wanted his house paid.
That's I say that to say, like, you would be in the same spot, yes, but you would have a bit more options. Because right now you're kind of in a race against the clock right now. Because, like, they're being patient, but 4 months behind is tough. That's when they start to begin foreclosure proceedings, usually at 3 months. But you've been communicating.
I think maybe because my initial thing was going to do a deed, they probably didn't do that.
Yeah, but say, like, it takes, like, let's say you get, like, 6 months. They're not really they're going to be like, what?
How about I pay 1 month for you?
You want to pay a month for me?
I'll do that.
Okay. Hey, that's fine.
Maybe that's just $6,000 to do that for you.
Because I'm trying to think so your mortgage is, are you able to pull it up? Are you able to pull it up by chance?
Yeah, I just logged in, but it makes me log in twice. That's my bank. I think it's my server. It doesn't even me.
If we got 4 months.
It just say.
Are you able to see your most recent statement by chance? Your July statement?
Okay, let me see.
4 months, you probably assess some penalties. So without penalties, you're 8016. Your closing costs are gonna be about 3,500.
What's penalties?
So like if you miss a payment, you're charged. Like if you pay
like
like
a late
late,
payment.
yeah, exactly, and that accrues also over time.
I think they just sent me like the payout amount.
Yeah, no rush on it. Yeah, I mean, when you get back to Wi-Fi, you can just send me that info. But yeah, your most recent statement, it'll say like how much is owed to make it current, things like that also.
I'm trying.
You're all good, no problem. So what did you say the balance was again?
That won't load either.
Okay. So the last payment was in February.
Oh, they probably were returned because I switched my bank account too. But this says 63. This one. Yeah.
Your July is again? It's weird.
No.
All right, cause you're on the 20th. Okay, go to view.
I know I didn't pay June.
That's what I need, right? If you could like save that and then send that to me via email, that would be great.
Wait, this isn't mine.
I can email it to you.
Oh, you're right. I'm sorry.
I never use it. I know I can, but I honestly don't know how to.
Well, the best saved, so you could just email it to me.
Okay, but then I will go and pay 2 for you.
2 what?
Pay 2 months.
Okay, perfect. Let's do that. So that takes it down to that would be great. 'Cause, yeah, we're getting real pricey at that point. I try to stay under 20 is usually my max to get in these deals, and that depends on the property. I'll say that's usually like if I don't have to do any work to it.
Okay.
Put some work into it. So much rather my.
Oh, my monthly did go up.
Your monthly payment went up.
21. Or was that been my payments? I don't know my payments. It says 21.
21. Yeah, 2101.3. Did you have?
I don't even check my mail.
So if you go back to like your statements or like your docs, because anything they would, if they change your month, they would have had to send you something.
Maybe it was always that. Listen, I don't know shit about this. My payments was always, I thought it was 2. Okay,
No,
this was 1. So they added July. If it didn't,
you mind if I scroll real quick?
I'll pay them.
This might be okay. Pay off quote. See what this is.
That's the price.
Awesome. Save this one. No, you can send this to me too. Customer correspondent.
I don't know. You leaving? Yeah, I'll go in and I'll pay 2 payments Friday. I'm not gonna be broke. I'll say that.
And I hate to say it, but if you kept it, you'd be broker.
Oh no.
All right.
1582. Oh yeah.
All right. So it went up 96.41. Why though? Your new total monthly payment for throughout. That wouldn't make much sense. Save this one. Because usually when there's an escrow shortage, it's for a certain amount of time. It shouldn't be for forever. Because especially if it's only a shortage of 441, that wouldn't make sense for your new payment to go up 96 for forever. What is what?
The 441. Oh.
Yeah, the shortage was 441. So like, given that example, if you had 5,000 was allocated for your escrow, but your payment went up, and now for your interest and tax or your insurance and taxes is 6,000, then your shortage would be 1,000. So that's yeah.
Oh, I see.
Okay.
I see. Okay. Friday I will pay, and then I will send you my new statement.
Okay. Perfect. Yeah, that would be great because that would
us-
take things down. 2101.3. 2101.3 times 2. 4,202.6.
Hold on. This is not funny. You said how much?
It would be 4,202.6 would be 2 months.
Okay, that's not too bad then.
Okay, that's better. Yeah.
Okay, that's good.
It's not good, but it's better.
That's all I can do.
So to make it current, it would take me about 6,400 to make it current, plus your closing costs. Still under the 20K threshold. Tight. It's tight.
Okay. How much was it that I'm paying?
Yeah, 4,202.6.
That's a lot. I don't care. I was about to say, baby, I pay half of that, but no, I can't.
Because this is what's owed currently to make it current.
So
this isn't including next month.
I'm gonna pay this, but I was like, what if I pay half of this too? Not half of, but half of a month, so it could go down like a little bit more.
Hey, that would be
But
great.
that's
Whatever you
too
can do to
much.
help.
I'll try.
Okay.
But you'll get your 2 months. I'll get your 2 months. I'll make sure. And then I can just email the new balance to show. All right.
So I'm gonna add that up here too. So that 2 months, what was that number again? 4,202.6.
0.60. How do I do this?
Sum
I don't
to
want to though.
paying 4,202.60.
Can you write that on your paper?
Yeah, that's what I'm
Okay.
doing. I like wet signatures though. It's more classic. Wet signatures is in person. All right, so I added this to the paper. So now, only thing left we gotta do. Any other
Sign.
questions?
Oh, I don't know if I want to sign.
Why not? What you waiting on?
I'm still scared.
It's okay to be scared, you know? I think anytime you're making a big decision, I think it is okay to be scared. I just think it's, obviously, I'm going to be biased. I try to say coming from an unbiased point of view, but obviously I'm biased. I was
So
just saying.
first, I don't know. The only worry from their side is just this whole thing.
Yeah.
Because of where like I stand with them, they request like every document, every detail.
Which is okay. So what's going to
they would
happen?
know about this.
They would, which is a good thing
Okay,
in a
that's-
sense. Because right now, they're lenient with you, but also they're not going to be lenient for much longer. Like I said, banks, they care about getting their money at the end of the day. So what's going to happen is as soon as I submit this to our title company for this title, what they're going to do is they're going to request a payoff directly through the mortgage company. Then the mortgage company's going to be like, okay, why are we getting a payoff? All right, we want to know like what's going on here. Yeah. But as long as they're getting paid, that's what they care about, you know?
But see, the VA it's just a little different though.
No, I get it. Trust me. I think all of mine are VA.
Oh, okay.
Yeah.
I don't know. I just want to go over this with them first. I don't want to be like,
I wouldn't. Okay.
Oh shit.
Yeah, so I wouldn't recommend going over it with them. Now, I would recommend going with it like with a lawyer or a title company, but not directly with a mortgage company. Because remember, this is kind of like a loophole in the mortgage.
I know that. That's what I'm saying though.
So what happens is like if you go right to them, you be like, hey, this is what we're doing. They're gonna be like, no, you can't do that. But it's like if you do it and they're like, as long as they're getting paid, they'll turn a blind eye in a sense, even though they know what's going on. But it's like you can't go right to them and be like, oh, this is what's going on.
So they're gonna think like, oh, she just gave us the 6,000, well, the 10,000.
No, they're just gonna see that, hey, it's current now. So they're gonna know it came in, obviously, but they're not gonna be like, oh, like where did this come from, so on and so on. All they care about is making you current, because what's gonna happen, what banks don't want to foreclose, because one, foreclosures are expensive because they have to pay for that to be done. They have to pay agents, they have to pay lawyers, all of that. They have to pay auctioneers. So, okay, what's another alternative to foreclosure? Short sales. They don't want to do a short sale either because they got to pay an attorney to handle the short sale. They got to pay agents, all of that. All right, what's another alternative? This is an alternative. A traditional sale, you renting it out. Like that's why they kind of gave you those options. Deed-in-lieu is another option, but the banks want to stay away from having to pay things as much as possible. This is their way. They don't have to pay anything at all. Where I'm eating the fee. And if I wasn't confident that it would be fine, I wouldn't do it because I'm not getting a house for free, you know? And if I get the due on sale hit immediately and I've had to pay that money, that would be dumb. Like that would be a dumb mistake to do, which I'm not in the business of making dumb mistakes, you know?
I get what you're saying.
Yeah, I wish I could tell you like, hey, like everything's gonna be 100% fine. The reality is more than likely it is. Like I said, you know, I'm in national group where we do this all the time across the nation, other states, and usually everything's fine. But there is some instances in which due on sale clause may happen, but that's why we have all of this stuff right here to say, okay, if it does happen, this is our repercussions for that. This is our way around it.
Okay. Well, either way it go, if I don't, I'm still gonna have to pay. So
exactly. So what you'll do is you'll just write your first and last there, and then you can sign right there at the bottom. And then also, what I do is just to get more contracts, I'll just get a boomerang if you're signing it.
Property address. Jesus, $1,000 just gone.
What you say?
In about right here, selling.
Yep. Right where it says seller.
Talking about my $4,000 that I didn't want to pay. That's it.
All right, so that's it for the first page. Put your mailing address, your phone, and your email, and then date it. Anytime you sign, just date, please. And this is just for the title company's purposes.
I'm sorry, I mean the name. My current mailing?
Yep.
Where I live now?
Yeah, because this is what the title company's gonna get. And they'll use this to reach out if they need anything. More than likely, like if they need your permission for payoff and stuff like that. So if you get a call from somebody like, hey, I'm trying to get that information from you, it's not a scam. As long as they say they're from Fortis Title. All right, so that's and then I'll sign afterwards. And then what you'll do is you'll write your first and last here again, and then you'll initial each page at the bottom. And then any part it tells you to sign, like here, for example, you'll sign. And yeah, any part where it says seller to sign, you'll sign. We're good, we're locked down.
Jesus Christ. Date right here?
Anytime you sign is when you date. But when you initial, you don't have to date or anything like that.
It's hot. I'm leaving y'all.
So I'm gonna ask the title company too what they think is best. Because if your mortgage statement, if it ends the 20th, that's interesting. I haven't seen it end the 20th before.
What is that?
Yeah. This will be the date. So like whatever today's July something, and then you'll sign and date where it says seller. There's 2 spots for sellers, just putting in if it, 2 people in the title. So if it ends on the 20th, there might be, I think that's why you haven't had your July statement.
What you mean by that?
So if it ends on the 20th, then that means there may be another penalty. Well, another mortgage payment will be due with another penalty after the 20th. So I would try to close it before the 20th in that sense.
So Friday will still be good for me to make those?
Yes, for sure. Yeah, because those, regardless, they're still going to be due.
Oh, just one, right?
Yep.
All right, I'll pay those Friday. I probably could pay one of them today and then the other one Friday.
And then what I'm gonna do is I'm gonna get my base inspectors here. This isn't on the lockbox. It is on lockbox? Regular lockbox or rain? Okay, we'll figure it out. So yeah, that's perfect. Thank you. And then yeah, so what I'll do is I'll sign my portion also, and then I'll submit it to the title company. I'll also, I don't know if I'll be able to get to it tonight, but tomorrow, I'm sorry.
When I pay them, I think we should come back Friday. Probably not come back here. We back up Friday so I can give y'all all of my papers or email.
All right, sweet. I appreciate the time. Thank you. So you all see my negotiations with that seller and me explaining creative financing to her from start to finish. Now, she didn't know anything at all about creative financing, and she had a lot of objections about it. She was even asking is illegal, things like that. Thankfully, I was able to explain it to her and get her to sign it. Now, if you want to be just like that, be able to explain creative financing and get deals signed for yourself, get money in your pockets, real estate investing, become a closer. And if you're interested in real estate investing, watch the next video. Bye.